Calvert Home Mortgage. You guys give everyone, just so they have an understanding of where we're coming from, what do you guys kind of do? What's the focus really? Other than mortgages, we can figure that much out.
Yeah, it is. So our focus is very narrow as a mortgage lender. So we focus on lending on short-term residential. So borrowers who have a short-term residential need, we want to be there. And short-term to us, 1 day, 1 year, as long as there's a plan and a realistic plan to exit our loan, we want to support that borrower. With that model, 70% of our business today is lending to real estate investors who are either buy, renovate, and sell, flippers, or real estate investors buy, renovate, rent, and then go get bank finance, build out their rental portfolio that way. So that makes up the bulk of our business today.
So they come to you guys because you guys are more like why do I need to know about Calvert Home Mortgage? Because I can just go to the bank and try to do the same type of thing.
Banks aren't typically wanting to do that short-term lending, though. Typically, Lorenzo would know better, but for the most part, banks want that long-term stuff. So if our clients are turning things around, if they're turning things around in 6 months, that's not the business the banks want. So we'll take on the clients from the purchase, and then they renovate the property and either sell it or refinance, and that's when they head to the banks when they want to keep it long term.
Got it. And that's where they'll get lower rates. They'll pay higher rates with you guys, obviously, because of the premium that the product that you're offering.
Yep.
So is the lending open then for you guys? Like, there's no penalty to break because I guess it's expected to be short term, right?
Yeah, it's 6. We write everything 6 months fully open, interest only payments. So if they borrow for a day, they only pay interest for a day. They need to renew past the 6 months. As long as the loan's performing, we renew it at no cost. But to follow up with Garrett, a couple other reasons why they'll borrow from us outside of the short-term nature. A lot of our borrowers are finding houses that haven't been touched in 30, 40, 50 years. Maybe they've had a hoarder in it, tons of deferred maintenance. So even if they are bank eligible, the bank looks at this appraisal and says, wow, this thing does not meet our standards. No, we won't lend to them. Or another option that we have is we allow the borrower to get in with a very low capital entry. So as long as the project's profitable, borrowers are borrowing from us with as little as $20,000 down. So you could buy a $800,000 house, put $100,000 into it. Let's say it sells for 1.1. You're going to make net of everything $100,000. We'll support that with only $20,000 down.
Yeah, but what else do I need? Because if I have $20,000 and nothing else to my name, you guys aren't going to like that.
You're right. So what else they need is they need to cover that down payment. So the $20,000, they can put more down, which lowers the interest rate, but they need that down payment. They need the rental costs and they need the carrying costs.
So you look for that as cash in the bank?
No, not necessarily. Yes, we like to see some cash in the bank, but they can use JV. They can use credit lines. They can do cash from family, all these different things. We just want to see that they have the capital to be successful in these projects.
And so basically it's as long as you can fund the project, sustain it, and then be able to have an exit, that makes all the numbers work. Calvert's comfortable.
Yeah, exactly. Yeah.
Hold on. Let me dive into this a little bit. So the rate, just so everyone's talking, the rate's high, and which it should be for this type of lending, right? Because the rates, I know it's going to vary depending on some things, but roughly give everyone an idea of where's the rate at for this type of thing.
Yeah, so rates range anywhere from 9.99 to 17.99.
Okay.
But you have to consider that these loans are typically only lasting 6 months. So you can't really, that's an annualized rate.
Yeah, no, it's a cost of doing business. Yeah, exactly. 100%. Yeah,